Hello, you're muted.
Sir, good evening, everyone. A very warm welcome to all of you. We are delighted to have you all for, for this session, and it's high time to have insights of such a practical topic, which is related to GST, because I think we are facing day-to-day notices from the GST department, and we have some insights about that. And as we are excited about this session, I hope you all are excited for this. To officially begin this session, I would like to invite Ms. Kalpana ma'am to for the opening remarks.
Thank
Over
you
to you,
so
ma'am.
Thank you so much, Harshali, for giving me the opportunity. ICA Kalpana Thakur, founder of Friday Fleet, welcome you all on our 64th episode of Friday Fleet. Friday Fleet is brainchild of me and CA Poonam Pathak under guidance of respected CA Dr. Rajkumar Adukia sir. I'll just take a minute to tell you about what our platform is if you are the one who is joining for the first time. On our platform, we are conducting sessions every Friday on technical as well as self-help topic. And today's topic is most critical and sometimes I must say challenging in terms of our day to day activity. Whether you are a business owner, a practitioner, all of us know how important it is to know about GST and that too input credit and the litigation. So today we are having our esteemed speaker, Advocate Sri Rohit Parasrampuria. I hope I have pronounced it correctly on the panel.
Yes.
Yes, thank you. To throw light as per his expertise on the said subject. Without taking your further time, I would like to hand it over to our moderator for today's session, CA Harshali Salvi, for the further deliberation of the session. Over to you, Harshali. Thank you so much.
Thank you so much, ma'am, for the opening remarks. It's now my pleasure to introduce our esteemed speaker, Advocate Rohit Parasrampuria ji. Mr. Rohit is a seasoned legal professional with over 8 years of experience in a litigation and dispute resolution. He also have a dual membership of two India's most respectful institutions, ICAI, Institute of Chartered Accountants of India, and Institute of Company Secretaries of India. His broad-based expertise span tax litigation, corporate laws, insolvency. We also have certification with FAFD, that is Forensic Accounting and Fraud Detection from ICAI. Whether it's navigating complex tax dispute, advising on insolvency and bankruptcy court, is also resolve sensitive corporate disputes also. So Mr. Rohit brings a holistic approach that combines legal precision and financial insights also. We are truly privileged to have him with us today. Mr. Rohit, the floor is yours. But just a quick note for the participants that I know you all already have questions with yourself before starting the session because the topic is so practical. लेकिन आपको थोड़ा सा धैर्य बना के रखना पड़ेगा. To for the question and answer, we will take it at the end of the session. Over to you, Rohit ji.
Thank you, Arshali ji, for the nice introduction, and thank you, Kalpana ji, for providing me the opportunity with respect to presenting the seminar. So let me come up with the presentation. So before we start the today's topic with respect to unlocking input tax credit and navigating GST litigation, everyone must be having a question in their mind that why GST tribunal has not been set up in spite of so many litigations which is being crept up till now. Why GST tribunal is taking so much time? If anyone can answer me, there is a question from my side before everyone asks from me. Yes, anyone? Why there is a delay of 7 years since GST 8 years, almost 8 years. We have celebrated 8th anniversary of GST. GST was enacted came into enforcement on 1st of July 2017, and right now we are standing in 2025. And there is so much heavy burden or so much hard pressed on the High Court with respect to dealing with the GST litigation. And till date, GST tribunal has not been set up.
I think it's a dispute of central and state that the member should be of there from the states 2 members and from the central also 2 members. I
Yes,
think
you are
this is
right.
the
There is a dispute with respect to Madras Bar Association advocates and the Union of India, where they emphasized upon with respect to the uh, composition of the GST tribunal, members of the GST tribunals. Initially, in section 109, there was a provision where 2 technical members will take a seat along with 1 judicial member. So, so they filed a case with respect to this issue that since there will be an inconsistency in the board and there will be a doctrine of separation of justice, since a technical member is not having much of the expertise with respect to judicial outputs. So they pointed out that, so they filed a petition before the Madras High Court regarding this issue. So this case lasted on for around 4 to 5 years. In August 2023, amendment was passed through order where they provided that out of 2 members will be judicial and 1 member will be technical. Then again in September, Madras Bar Association again filed an application before, again a writ petition was filed with respect to whether why an exclusion has been made with respect to lawyer, that why exclude there is an exclusion or there is a bar that advocates cannot be adjudged as a judicial member. So again, a writ petition was filed and order. There was a hearing on 2nd of April with respect to 2025 in the Supreme Court, which is still pending. But now, 4 days back only, GST tribunal is knocking the door, and government is ready to roll out the GST tribunal all over the country so as to minimize the litigation and hard press which is being faced by the High Court all over the India. So let us now begin the topic input tax credit. As you are aware, if you go through the bare reading of input tax credit, it looks easy. But once you delve into the practice of input tax credit, then you come to know that how difficult it is and how complex it is. The government tried to do the justice with respect to ease of doing business, but somehow there are so many litigations which are being cropped up with respect to ITC mismatches and with respect to the suppliers default or the restrictions. There are restrictions with respect to claiming of input tax credit. Then 2A was rolled out, then 2B came in, then several notifications came in where they reduced from 20% to 10%, then 10% to 5%, and now there is a provision that no provisional ITC can be claimed. Only a restricted ITC which is available in 2B can be claimed. So now let us start. Since I gave you the brief introduction with respect to how litigation is being burdening the court. So input tax credit and input tax is defined in section 2 subsection 63 and 2 subsection 62. Input tax credit means the credit of input tax. As you know, input tax an input tax is defined in section 2 subsection 62. Input tax in relation to registered person means the CGST, SGST, IGST or UTGST charged on any supply of goods or services or both to him and includes this is the chargeability and levy provisions of IGST and other CGST and SGST and UTGST. So in simple terms, input tax credit means the credit which is available to the recipient of goods for which he has paid to the buyer and for which he is using the services for using or intended to use for the course or furtherance of business. Means आपको business में use करना होगा या फिर intended to use. Means in future you will be using this ITC then only or and that too for the furtherance of business or in the course of business. For personal consumption or for its own account, ITC is not available. So you need to use it for the furtherance of business or as well as the course of business. Now, uh, ITC provisions are being dealt in section 16 to 21, read with rules 36 to 45. In section 16 talks about the eligibility and conditions. क्या क्या क्राइटेरिया है जो फुलफिल होने पे आपको आईटीसी मिलेगा. सिंस आईटीसी इज अ concession, it is a benefit which is provided to the recipient. It is not a as a constitutional right which you can avail. It is a benefit, or what you can say, it is a conditions or a concession which is required to be fulfilled, post which you are eligible to claim the ITC, which is being dealt in section 16(1). And section 17 talks about the apportionment of credits, how the credits will be apportioned between the, when a business is in supply of capital, taxable supplies as well as exempt supplies, when business is dealing only in exempt supplies. And it also talks about the negative list which are being covered in section 17 subsection 5 with respect to the service goods or services on which ITC is not available. And section 18 talks about the ITC in special circumstances, which we will deal in coming slides, which talks about in case there is a merger or amalgamation or demerger in the company, or there is a voluntary registration uh, being taken up by the company post implementation of the GST Act, which is dealt in section 18(1)(a) and 2. So now coming on to section 16(1), eligibility and conditions for taking ITC. Section 16(1), every registered person shall, subject to such conditions and restrictions as may be prescribed, and in a manner specified in section 49, be entitled to take credit of input tax charged on any supply of goods or services, or both, to him which are used or intended to be used in the course or furtherance of his business, and the said amount shall be credited to the electronic credit ledger of such person. So every registered person is defined in section 2 subsection 94, which talks about the person who has already registered under section 25, who has applied for the registered and who has obtained the registration, is only eligible to claim the input tax credit. Taxable persons are not eligible. So there is a difference between the registered person and the taxable person. Registered person are basically the person who are who has obtained the registration of the GST, and the taxable person are the person who has not obtained, who on whose the GST is applicable, but he has not obtained the registration, also comes under the taxable person definition. So taxable person definition is wider enough as compared to the registered person. So the input is available on supply of goods or services. So it talks about the used or intended to be used in course or furtherance of business. So ITC is available only when it is used with respect to the business activity. Otherwise, it is not available, and it should be credited to the electronic credit ledger. So credited means you have availed the ITC with respect to the electronic credit ledger. So if you can see, there is a difference between eligible ITC and this availed ITC and utilized ITC. Eligible ITC means ITC which are eligible uh, for the recipient as per the provisions of section, after fulfilling the conditions of section 16(2). Whereas utilized talks about the ITC which you have claimed in your GSTR 3B. Once you file GSTR 3B and supplier has filed GSTR 1, so you have in GSTR 3B table 6 you have claim the ITC of that input of for the purchases you have made. For that amount, you are that is available ITC which is availed by the recipient of service, and that utilized ITC is with respect to you have adjusted your credit amount through your tax payability through uh, credit ledger, electronic credit ledger. If there is, you have adjusted your payment liability with the amount being credited in the electronic credit ledger is utilized ITC. So this is the terminology which is to be taken care of with respect to eligibility, availment, and utilization of input tax credit. So there are 6 conditions. Initially, there were 4 conditions, section 16, 2A, B, C, D, and after that there was an insertion of section 16(2)(a) and section 16(2)(ba) with respect to the availment of input tax credit. So there are 6 conditions which are to be fulfilled in order to be eligible, in order to have a statutory right with respect to the availment of input tax credit is number 1, possession of tax invoice. So the buyer must have a valid tax invoice or a relevant document for the purchase. So in this case, the buyer or the recipient of goods must be having a valid tax invoice. whether it's an e-invoice or a tax invoice, if a person is under the provisions of invoicing and his turnover is greater than 5 crore rupees, then he's bound to generate e-invoicing with respect to B2B supply. So the recipient is required to have a valid tax invoice, whether it's a regular tax invoice or a e-invoicing. So in case of e-invoicing, possession of e-invoicing is mandatory for the recipient of goods. And second is with respect to receipt of goods and services. The goods or services must be actually received by the buyer with respect to the availment of input tax credit. And in this case, whether goods are directly sent to the agent of the recipient is also covered up, and bill to ship to model is also covered up, where there is a deemed that actual receipt of goods and services has been taken place by the recipient. And third is with respect to tax charged has been paid to the government. There are several litigations which are pending where the supplier has filed the GSTR1, but he has not deposited the tax with respect to his liability in GSTR3B. So he has filed GSTR1, and on the basis of GSTR1, the recipient has taken an ITC, but the supplier has not paid the tax amount to the GST and exchequer. So in this case also the conditions of availing input tax credit is being hampered. Now supplier has furnished return under section 37. Section 37 talks about the statement of outward supply, that is form GSTR1. Supplier must have reported the invoice details in their GSTR1. So now there is a matching mechanism with respect to invoice furnishing facility, where a recipient can also tick mark with respect to what services or what inputs he has taken from the supplier. So GSTR1, in GSTR 2A or 2B, the purchases needs to be reflected of the supplier in order to be eligible to claim the input tax credit. And ITC gets reflected in GSTR 2B and it is not restricted under section 38. So once GSTR1 is filed by the supplier, so the input tax credit will appear in the recipient's GSTR2B, and it must not be blocked as per section 38. Then only it is eligible for the recipient to take the input tax credit. And furnishing of return by the recipient is also mandatory in order to take the benefit or in order to avail and utilize the input tax credit. Until and unless the GSTR 3B is filed by the recipient, the portion of utilizing the input tax credit won't arise. Since availment has been done, with availment and utilization is only done when GSTR 3B is filed. Until and unless GSTR 3B is filed, availment and utilization won't arise. Now coming to section 16.3. So section 16.1, section 16.2 and section 16.4 is related to with respect to the claiming of input tax credit, but section 16.3 speaks about the depreciation claimed on capital goods. So supposedly, if by an example, if you can understand, suppose a sale of rupees 1 lakh, suppose a purchase of rupees 1 lakh is made by the air condition, purchase of rupees 1 lakh air condition along with an 18% GST has been made by the recipient. And in this case, if he capitalize the amount, whole amount, 1,18,000 in his balance sheet with respect to the asset, and he has claimed the depreciation in PL debit side, then in the whole amount of 1,18,000, then the ITC with respect to such capital goods won't be allowed. Otherwise, dual benefit will be taken by the taxpayer with respect to this ITC. And if only 1 lakh is capitalized by the supply recipient of goods and 18,000 is being taken as an input, then the depreciation will be allowed. And so input tax credit cannot be taken on the tax component of the cost of capital goods. If we can go through this section, where the registered person has claimed depreciation on the tax component of the cost of goods sold and plant and machinery under the provisions of the Income Tax Act, the input tax credit on the said tax component shall not be allowed. So if you have availed the depreciation on the tax component, so ITC won't be allowed. So in order to avail the benefit, so generally this is not the case in the initial years. In 1718 and 1819, people used to do take the dual benefit with respect to this availment of depreciation also of the tax component and also with respect to ITC on the depreciation on the whole amount. So now it is already settled, and professionals are also aware about this scenario that since Section 16.3 is now commonly followed by everyone. Now coming to Section 16.4. 16.4 talks about the time limit or the restrictions on the buyer with respect to the claiming of input tax credit. So initially there was a amendment in section 20 in the year 2020, where there was a clause that up to the due date of furnishing of the September return only of the subsequent financial year, the recipient was able to claim the input tax credit. But now there is an amendment through which 30th November of the following financial year or the date of annual return filing, whichever is earlier, will be the last date of claiming the input tax credit. So 30th November means the last date of filing the October return is with respect to 20th November. So by 30th November, if the October return is filed, or the last date of due date of annual return filing, that is 31st of December of the subsequent year, is whichever is earlier, is taken as the last date of claiming the input tax credit. So beyond which the recipient cannot exercise his rights with respect to the claim of input tax credit. There are case laws in this respect also, which we will deal in coming slides, where which talks about the restriction and a statutory right, which means a statute governs the time limit with respect to the input tax credit, and whether you have paid condonation with respect to delay filing of return, that does not give you a vested right with respect to the claim of ITC of earlier years. And one more thing is expenses with respect to this, and to be must reflect the input tax credit, which is a prerequisite condition. Then only a person can be eligible to claim by 30th of November or the date of annual return filing, whichever is earlier. Now ITC, now Rule 36.4. Rule 36.4 speaks about the ITC which is being ITC which is eligible, which the recipient can take. Earlier, before the amendment, ITC with respect to Rule 36.4 was on the provisional credit, where the input ITC was taken on the basis of the GSTR to be with respect to the GSTR 2B and 2B and 2A, which was an ITC was taken on the self-declaration basis in GSTR 3B. Even if not appearing GSTR 2A and 2B, people were taking on the ITC on ad hoc basis without they were of the belief that they have received the goods and they are holding a valid tax invoice. Any of the two conditions or one conditions are satisfied, so they were claiming an ITC, and they were not concerned about whether the supplier is filing the GSTR 1 or GSTR 3B. But now post amendment in the year 2019, with respect to Rule 36.4, several amendments and notification has turned up 3-4 notifications where provisional credit was restricted to 20% after the rollout of GSTR 2B. Then it came down to 10% in 2022, and then 2021, and then in 2022 it came down to 5%, and now provisional credit is restricted to only the ITC which is appearing in 2B only. No ITC allowed for invoices not uploaded by suppliers. If invoices are not uploaded by suppliers, then the ITC with respect to the pending, with respect to the supply will not be allowed by the recipient. So Rule 37 talks about the payment to vendors within 180 days. This is also a binding provision on the recipient of goods and services in order to be eligible to claim the input tax credit. But generally, I've seen that many of the practitioners are not following with respect to Rule 37. Even if the payment is not made within 180 days from the date of issue of invoice, they are not reversing the input tax credit. And there is also still a mechanism needs to be framed out in order to identify whether the payment to the vendors has been made within 180 days or not. So it is, as per Rule 37, it's a mandate which provide to provide for payment within 180 days to the vendor from the date of issuance invoice. And if payment is not made, then the input tax credit on the said invoice must be reversed. And interest under section 50 is also payable from the date of availing the ITC. If you have availed the ITC with respect to the uh, supplies from the vendors and you have not done the payment, then until the date of reversal, interest is also need to be paid by the recipient of goods. And once the payment is made after the 180 days or as per so the taxpayer can again reclaim the ITC. So generally, we have seen that many of the practitioners are not following this reversal with respect to the, and GST is also working on the mechanism with respect to identify uh, or ask for the documents with respect to the payment whether made in within 180 days or not. So to prevent this ensures the timely vendor payment since supplier is supplying goods to the recipient and he needs to pay within the 20th of the succeeding month. So this ensures that the time for to have a liquidity flow with the vendor. The government has come up with this rule so as to ensure vendor payment is being made timely and the misuse of the ITC provision and to curb the misuse of the ITC provision in case there is a fake invoicing or uh, and there is a bogus invoice with respect to where there is no supply and only the bill has been passed on. Now talking about Rule 37A, non-payment of tax by suppliers. This rule is also coming and over the supply recipient with respect to in case no payment has been made by the supplier. So this rule has become effective from the 26th of December 2022. This talks about the compliances of section 16(2)(c), which requires that which we have earlier dealt with, where tax payment is necessary to be made to the government exchequer by the supplier of goods. So it deals with the reversal of ITC where supplier fails to pay tax. There is one classic judgment also on this where uh, the supplier has not paid the taxes to the government and the burden is on the recipient with respect to the payment of input tax credit. So, and there is a classic judgment DY Bethel, which was passed by the Madras High Court, where it was decided that the government or the revenue must first catch up with the supplier and then only payment can be realized by the recipient of goods. So it deals with the reversal of input tax credit where the supplier fails to pay tax. If a supplier reports an invoice in their GSTR 1 but does not file GSTR 3B for that period by 30th September of the following year, the recipient who has claimed ITC on that invoice must reverse the ITC. And this reversal must be done in the GSTR 3B return filed on or before 30th of November of that following year. If the recipient does not reverse the ITC within this time, they are required to repay the ITC along with the interest as per section 50. However, the recipient is allowed to reavail the ITC in their GSTR 3B once the supplier files GSTR 3B and pays the applicable tax for the period. So this speaks about uh, about the reavailment of ITC. Once the supplier has filed the return post 30th September, then the recipient is again allowed to reavail the ITC in their 3B and once the supplier files the GSTR and pay the applicable taxes, then only the recipient is again able to reavail the ITC on the said amount. So now coming on to ITC in case of cancellation of registration, there are around 20 to 30% of cases which are pending before the various high courts in India is with respect to this particular issue only, where the registration has been cancelled suo moto or where the registration uh, has been cancelled on the belief that there is a fraud or willful misstatement or suppression of facts are involved, or there is a bogus invoicing, or there is a mismatch with respect to e-way bill and RFID with respect to the movement of goods. So when a dealer's registration is cancelled, they are no longer eligible to avail or utilize input tax credit from the date of cancellation. So once the GST registration is cancelled, from that particular date, the registered person is not eligible to claim the input tax rate, as we have already gone through section 16(1), which starts with a phrase every registered person. So only a registered person is eligible to claim the input tax credit, not the taxable person. Once the registration is cancelled and the person is having a turnover beyond the prescribed limit, then he becomes a taxable person, but he's not a registered person since registration has been cancelled with respect to his GSTN number. So, and post revoke, suppose, and then a revocation has been filed by that particular recipient, that particular taxpayer, then then after that he is eligible to claim the input tax rate. So the section reads as follows: any ITC claimed after the effective date of cancellation is considered ineligible and may need to be reversed along with interest. And if the cancellation is later revoked, the dealer must be allowed to reavail the ITC subject to the conditions specified under the GST law. So in this case, there is a case law also, LGW Industries Limited, where the ITC was denied on the ground of suo motu cancellation of a registration certificate of the supplier. In this case, the supplier's registration number was cancelled. So disallowance of input tax credit was done to the purchaser, where on a belief that by the revenue authority that there is that the supplier is not a non-existent, or there is a fake supplier, and the bank account, so and where they also was on a contemplation that the bank accounts opened by the suppliers are on the basis of fake documents, and the petitioner has not verified the genuineness and identity of the suppliers before entering into the transaction with those suppliers. So this case was heard and argued, and later on it was found that the in this classic judgment was passed, where the onus is upon the authority to identify whether there is a whether genuinity or genuineness of the transaction or needs to be questioned or not. Since the recipient has met with his eligibility condition with respect to having a valid invoice at the time of purchase, and the registration of the supplier was also valid at the time of purchase of goods from the supplier, and the payment was also made to the supplier. So in that case, the judgment was passed in favor of the recipient, where the case was referred to fresh adjudication with a liberty, so to allow the input tax credit with respect to the suo motu cancellation of the uh, supplier of services. Now, ITC in case of non-genuine dealers. In most of the cases, whenever a GST authority issues a notice, they are on a belief that the suppliers are non-existent, or fake ITC is involved with. Whenever a supplier has not filed GSTR 1 or 3B, notices are received by the recipient that the supplier, that the goods you have purchased is from a non-genuine dealer, or a fake invoicing has been issued without actual supply of goods, and there may be a penal provision with respect to section 122(1)(a), which cites about the fake invoicing. So and they also deny ITC claim with respect to this. So in case of so in Manier case, it has been seen. So DY Bethel is one of the case law which is also being dealt with, is a classic case law which is passed in favor of the SSE, which reads as follows: the SSE must have received the goods, and tax charged in respect of its supply must have been actually paid to the government either in cash or through utilization of input tax credit admissible in respect of the said supply. And if tax has not been reached to the kitty of the government, then the liability must have to be eventually borne by one party, either the seller or the supplier. And in the case on the hand, the respondent does not appear to have taken any recovery action against the seller. So in this case, DY Bethel, the goods were purchased by the supplier and the supplier did not pay the taxes to the government. So instead of catching and hold to the supplier, the GST Revenue Authority has eventually issued a notice to the buyer, and they were asking for the payment of input tax credit along with the necessary interest and taxes, so as to uh, uh, payment of the input tax credit. So the government, so in this case, uh, the DY Bethel, the court argued and passed a judgment that the uh, seller has collected the tax, where the buyer has proved that the seller has paid taxes from the purchasing dealer. And there was an omission, and the court also acknowledged that the omission was on the part of the same seller with respect to remitting the tax amount. Uh, and there was no strict action was initiated by the revenue with respect to the seller. So so the court passed an order in favor of the SSE, where they pointed out that the first legal steps which needs to be taken by the revenue is with respect to the catching hold of the seller who has not paid the taxes, and strict legal proceedings needs to be initiated against the seller instead of directly issuing a notice or catching hold of the buyer. Now this is another case law with respect to the availment of section 16.4. Section 16.4, the Thirumala Konda Plywoods versus the Assistant Commissioner of State Tax. In this case, in this case, the petitioner was a sole proprietorship concern which was registered under the CGST and the Andhra Pradesh GST Act, and the notice was issued to the petitioner under section 74 with respect to, though generally sections of input tax credit is issued under section 73, but in this case the revenue issued the notice under section 1774 with respect to 74 basically deals with the fraud, where is deceitful act done by the uh, buyer general, and with respect to the willful misstatement, where they have intentionally and knowingly suppressed any information, then only section 74 notices are issued, where the time limit is 5 years with respect to dealing with the notices. So the notice was issued under section 17.4, and the personal hearing opportunity was also granted to the recipient uh, in this case, and then as assessment order was passed, was issued on 14/3, creating a demand of 11,24,994 to the from the petitioner, which includes an interest and penalty provision of 100%. Since section 74 comprises of 100% penalty, and whereas section 73 comprises of 10% of tax or 10,000, whichever is higher. So section 74 is a strict section as compared to section 73, as malified intent needs to be proved and involved so as to be eligible, so as to
Sorry
issue.
to interrupt you, sir. Could we start question and answer? So there are a lot of questions I think participants would have. So after completing this, should we?
Yes, sure.
So have you completed this part of case law you are discussing?
So you can start with the question, not an issue. We'll cover up again.
Okay. There is a case it's asked by the Sonia. Sonia, would you describe your question very clearly? You can unmute yourself. Sonia, are you there? Okay, let me ask this question. Sonia is asked, if a vendor, Mr. A, registered in Punjab book and books a seminar hall for a business use in a hotel, and that hotel is in Gurgaon, Haryana. In the GST Act 2 of Mr. A, ITC availability is mentioned as no for the invoice related to the seminar hall. Why? She's asking for the reason why it is mentioned as a no.
See, ITC eligibility of ITC is on the basis of the state wise, not the pen wise. So suppose I'm staying in Calcutta and I'm going for I have a registration of GST number in Calcutta and I'm traveling down to Maharashtra with respect to some work and I'm booking a hotel over there for staying purpose. So since in this case, chargeability is where the immovable property is located. So in my case, the hotel is situated in the Maharashtra, Mumbai, so they will charge CGST and Mumbai SGST. And in this case, I won't be able to take the input tax credit because I don't have a registration in the Maharashtra and I have a registration in Calcutta. So there is a concept of so there is no in a statute you won't find there is a bar. There is no clear cut mention with respect to this in the block credit section, but since ITC is available as a state wise and not as a pen wise, so in this case, in the case given in hand, seminar hall. So since the registration number is of Punjab and the seminar hall is booked for the business purpose in Gurgaon, so in this case, you won't be able to take the input tax credit as ITC is with respect to claiming of ITC is on the basis of the state wise registration and not on the basis of the pen wise registration.
Okay, so you are saying that due to place of supply, it is Haryana, Gurgaon. So the invoice is conducted C and S, that is CGST and SGST, and due to
Yes,
that,
yes,
it
yes.
is not
Yes,
allowed to be.
immovable also. So the chargeability is with respect to the location of the immovable property. So in this case, hotel is located in the Gurgaon, Haryana area, and since the registration number vendor is from Punjab, so in this case, the input tax credit is not allowed.
Okay, so if we, I am just extending this question.
Yes, yes.
If the business is literally that is the only whole and sole business if one is doing, and तो ट्रेनिंग अलग अलग मैं हिंदी में बोल देती हूँ कि ट्रेनिंग अलग अलग स्टेट्स में अगर हम ले रहे हैं और हम तो फिर उस केस में तो आईटीसी हमको अलाउ नहीं होगा सो
No,
इज
then you
देयर
have to
एनी
apply
वे
for the casual taxable person registration in order to be eligible to claim. See, Section 75 does not put bar upon the nature of the service which you avail. Yes, it does not, but ITC is denied because of the state mismatch. If there is a mismatch with respect to the availment of ITC with regard to the other state, then you are not eligible to claim the input tax credit.
So what will be the solution for this? Is the solution is ISD? Should we get ISD or there is some else?
If your business is of debt capacity, then ISD, then it is advisable to obtain the ISD. Otherwise, this may lead to the compliance and the professional cost also. So that needs to be considered as per the nature of the business activity. अगर business अगर bulky है, then we can opt for the registration or casual taxable person registration. See, suppose you are booking a seminar hall, then you must be taking a booking order also with respect to this holding a seminar.
Okay.
So you are not generating a sales invoice over there. So what you can do is you can take the booking with respect to suppose कोई stall लगाए अपने. Suppose I
Okay.
have a business of shirts, ready-made shirts. So I went to the Delhi. There is an expo with a trade expo of this textile. So I booked over there seminar hall. So in that case, I am taking a booking from you with respect to how much. Suppose you have interested in my shirts, so you have booked. So you have I am taking down the order, and then I am coming to Calcutta, and then I am supplying from Calcutta. In that case, you are eligible to issue. Then IGST invoices can be issued. So it's better to take down the order if you are booking. Suppose if you are conducting any trade expo or anything like that, then in that case you can do that. But if you are conducting a sales also, then also casual taxable person registration is required. And for that, after obtaining the casual taxable person registration, you will be able to take the ITC of that Gurgaon hotel.
Okay. Okay. It's quite clear. Anyone else who has a query regarding anything about the yeah, Kalpana ma'am, you have raised your hands. Please ask your query. Please unmute yourself.
Yes, Rohit, the casual person registration. This is something I'm hearing for the first time. So I'm not a GST person. I do handle audit and ROC compliance. So I would like to know what is casual person and it is registration. It is applicable to who?
Casual taxable person is basically you are obtaining a registration for a limited period or a limited purpose. So casual, suppose uh, just with an example as I've earlier explained, मेरा suppose शर्ट का बिजनेस है और मैं जा रहा हूँ सपोज राखी का बिजनेस है फॉर एग्जांपल एंड आई एम ट्रेवलिंग डाउन टू मुंबई दिल्ली पटना over there and I am booking a hall over there and from there I will be making a supply also. मैं वहीं से सेल करूंगा राखी वहीं पे स्टॉल लगा के वहां पे मैं इंस्टेंट सेल भी करूंगा इन दैट केस यू आर नॉट हैविंग अ जीएसटी नंबर ऑफ दैट पर्टिकुलर प्लेस suppose suppose I am selling in Delhi so I don't have registration number of Delhi in that case I need to apply for the casual taxable person registration and post which I will be able to claim the ITC of the hall booking charges also.
So you mean to say that we have taken the example of this
If you are
Rakhi
doing अगर आप कहीं से बिजनेस कर रहे हो फॉर अ पर्टिकुलर पीरियड तो आपको वहां पे रजिस्ट्रेशन होना जरूरी है सपोज इफ यू आर ट्रेवलिंग डाउन टू मुंबई दिल्ली anywhere and you are conducting a business and you are raising an invoice over there so you need to have a registration of that particular place. There is a concept of place of business, principal place of business and additional place of business, so you need to have a registration on that particular place of business. So in order to be eligible to sell from that place, you need to obtain the
we call it additional place of business. This is what the terminology I am aware.
no, no, you can call it additional place of business, but generally the terminology used is casual taxable person. It is only for a short period or a short purpose you are obtaining a registration. आप वहां पे खाली जा रहे हो एक महीना 15 दिन आप स्टॉल लगा रहे हो वहां पे ट्रेड एक्सपो में और फिर आप वापस यू विल बी ट्रेवलिंग बैक टू कलकत्ता और योर बेस सो इन दैट केस यू आर obtaining a registration. Additional
So
place.
when okay, sorry to interrupt. So when I will be coming back, and it is assumed that in this case I will not be having business from that place further.
Yes.
So no sale from that place further. So in that case, will that GST? So for the different another state, I will have another GST number,
Yes,
right? So will
yes,
it be
yes, yes.
surrender or how it
Yes.
works in
No, no, it
system?
is that casual taxable person registration is you will be getting up for only 3 months only. So post which you can
Okay.
extend also. So it's automatically you need to surrender that registration of casual tax.
After 3 months.
Yes, yes, post 3 months. So additional place of business is a different concept where you have a principal place of business in a particular state and you are further coming up with the more place of business.
Yes.
In many
Yes.
cases, e-commerce, if you are selling a product through e-commerce operator, so you need to have a GST number of गोडाउन एड्रेस ऑफ दिस दैट ई कॉमर्स ऑपरेटर ऑल्सो इफ यू अगर आप सपोज फ्लिपकार्ट से अपना कोई प्रोडक्ट बेच रहे हैं एंड फ्लिपकार्ट इज हैविंग अ 15 गोडाउन्स इन पर्टिकुलर स्टेट इन दिल्ली so you need to show the additional place of business of 15 godowns since you are making a sale from that particular godown. So आपको additional place of business is totally a different concept as compared to the casual taxable person.
Okay. Okay. So, if there is no further question, I do have extension through this existing query. If Harshali can allow, I can ask.
Yeah. Please go ahead.
Yeah. So, we are having eight minutes remaining. So, we do receive queries as a practitioner that you also must be receiving that few of the business where actually there is no need or the business owner is not intended to take the GST registration. Like it is certain that they are not going to exceed the threshold of the GST registration, minimum threshold. So in that case, in certain point in time, say for example, if the proprietary concern is going for opening the bank account, in those cases, bank asks for the GST registration. So we have seen cases where people say even that हम open कर लेते हैं GST and after meeting this requirement, we will close. So in those cases, can we apply this casual taxable person, or it is not applied to those
So
cases? Once it is taken, it will be for off.
casual taxable person means is easy in easy way I explain you. Casual taxable person आप अपने बेस से बाहर जा रहे हो. If you are
Okay,
residing आप
okay,
बेस
got
से
it,
बाहर
got it,
अपने
got
स्टेट से अपना होम स्टेट से आप बाहर ट्रेवल कर रहे हो और for a particular limited period of time you will conduct a business over there or a joint venture is taking place for 2 months or 3 months. In that case you apply for casual taxable person. लोग तो आजकल जीएसटी रजिस्ट्रेशन के कारण ही कितने जन जीएसटी रजिस्ट्रेशन मतलब बैंक अकाउंट ओपनिंग के लिए जीएसटी रजिस्ट्रेशन ले रहे हैं लोन लेने के लिए.
yes, yes.
And they then opt for the bogus invoices and fake invoices just to increase their sale. Instead of making an actual supply, they purchase bill and everything with respect to so that their OD limit can be increased or many things is happening in this way. Just because of bank, 90% of people are holding the GST registration. एज पर माई बिलीव 90% लोग इसीलिए जीएसटी नंबर रख के रखे जो मीडियोकर और स्मॉल एमएसएमई वाले हैं कि उनका ओडी लिमिट चलते रहे और उनका काम बढ़ते रहे बस.
Oh, okay. Back to you, Harshali. Thank you, Rohit, for clarifying.
Anyone else have question? Rupali ma'am or Soumya? You can also post your queries. We have few minutes left for the question and answer session, and then we can end up. So in between, may I ask one question, Rohitji?
Yes, yes.
Yeah. So, is there any time limit or extended time limit to issue the notice? Because we are seeing that many are notice in 73 and 74 uh, people's are means taxpayers are receiving,
In
and
section
that is
73, there is a time limit of 3 years from the
okay.
date of filing the last annual return, from the date of filing the annual return of that particular period. And
Hmm.
section 74 talks about the limitation period of 5 years. So,
Okay.
in that case, if you are having a uh, intent where you have an intent of fraud, willful misstatement or suppression of facts, then in that case, section 74 notices are issued and time limit is 5 years. And COVID period is excluded in that case. So COVID period is excluded. Supreme Court judgment was passed also with respect to the moratorium. So the government is taking the benefit of that section with respect to the moratorium.
Okay. So, is there any notification you can mention here? Which
Right now, I
notification is
don't have
that? And
the notification handy. Will share with you. I don't have the
okay.
notification of Supreme Court. That notification which provides for the moratorium period.
Okay. And you are also talk about the Supreme Court. If you can mention that also, it would be
With
helpful.
respect to
In respect to extension of the time
yes, yes,
limits.
extension notification order was passed. Suo motu cognizance was given by the Supreme Court. I don't have the relevant judgment handy with me, so I will share with you where moratorium period was given that in within this period, this will be excluded for the
Okay.
calculation of any period of any act with respect to the issuance of notice or dealing with the notices.
Okay, this is okay. Means this is not a specifically with the
No, no, not
CBIC.
only
It
specific
is
with
a general,
it was general notice with which was applicable to all the acts,
all
like
the X.
an IBC or other act with respect to the issue of limitation where limitation is being attracted.
Okay. So this 5-year limit is to issue the show cause notice or issue the order.
Show cause notice. Show cause notice.
Okay.
An order, yeah. An
Okay.
order needs to be passed. Then on an order needs to be passed under section 74 by the relevant authority also. So and today nowadays also sections period of 17-18 notices are being dealt with. Since it is in first appellate stage now, many of the buyer recipient has filed a case in the Calcutta High Court also and other high courts also with respect to 17-18 issue. So अभी तो GST litigation चालू हुआ है अब तो एक
Right.
साल का हुआ अब जीएसटी बोलने लगा है चलने लगा है रिस्पॉन्ड करने लगा है तो अब तो
Right.
अभी तो क्लासिफिकेशन स्टेज तक तो पहुंचे ही नहीं अभी तो आईटीसी में ही सब खेल रहा है अभी तो
बिल्कुल.
क्लासिफिकेशन बाकी है अभी कितने जन 8 साल से गलत क्लासिफिकेशन और रॉन्ग हेड्स में एचएसएन लिए जा रहे हैं एचएसएन बुक किए जा रहे हैं अभी तो जो सर्विस टैक्स में बाद में हुआ जो
हाँ
2010 के बाद गवर्नमेंट ने कैच होल्ड किया कि क्लासिफिकेशन के इश्यूज को कंसीडर करे। अब
राइट
जीएसटी में भी 10-15 साल हो जाएगा, फिर क्लासिफिकेशन का पॉइंट उठेगा कि वो 10 साल से तो आप रॉन्ग हेड में ही आप सेल और परचेज कर रहे हैं। फिर सबको ये
ओके
स्टैंड लेंगे कि ये तो ट्रेड पार्लेंस में हम कर रहे थे, ये नाम से एक्नॉलेज्ड है। तो अथॉरिटी ऑफ एडवांस रूलिंग कितने जन ऑप्ट नहीं करते हैं, इवन द प्रोफेशनल्स डोंट एडवाइज। वो अथॉरिटी फॉर एडवांस रूलिंग का एप्लीकेशन होता है, जहाँ पे प्रोफेशनल्स भी क्या रिलेक्टेंट नहीं है ज़्यादा कि अथॉरिटी फॉर एडवांस रूलिंग ऑप्ट करे। और अथॉरिटी फॉर एडवांस रूलिंग में भी काफ़ी सारा अलग अलग स्टेट में आप अप्लाई करेंगे तो अलग अलग जजमेंट्स आएंगे, वहाँ पे रूलिंग पास होगा, जो अगेन वापस चैलेंज होता है अपीलेट अथॉरिटी में, अपीलेट एडवांस अथॉरिटी रूलिंग में।
ओके ओके nice I think we are good to conclude the meeting and we have complete our meeting sharp at time.
So,
So I again ask if there is any query we can handle it now before closing the meeting formally. Okay. So, to close the meeting this formally, I would again like to invite Kalpana ma'am for the vote of thanks and give a certificate of appreciation as a token of gratitude for your time and contribution. Over to you, Kalpana ma'am.
Thank you, Harshali, Sanvi. Uh, I would like to thank our esteemed speaker for the day, CA Advocate Rohit Parasrampuria ji, for his patience. I would say he was explaining the whole session. I did not get the opportunity to sit from the start view of the movement. I was not with the session, but whatever I could hear, he was explaining every piece of information in a very detailed manner. And specifically the Q&A session, I think I'm the one who has taken the advantage and got to understand something new about GST, being a non-GST person. Thank you, Rohit ji, for your patience and the explanation. I would like to thank all the participants for being showing up in all the session. It's your participation that encourage us to bring the best every week. And last but not the least, to all our core team member of Friday Fleet, CA Harshali Salvi is present here. Rest of the team members, CA Poonam Pathak, CA Sunita Rathod, CA Aishwarya Joshi, CA Jyoti Maru, and CA Gunjan Jain. To all of you, it's our collective effort to have the session every Friday and bring best and grow together, learn together, and uplift each other in a collective manner. Thank you so much. Now, I'll take a minute to share certificate of appreciation to our esteemed speaker today. Is my screen visible, Harshali?
Yes, it's coming out.
Let's
Yeah,
applaud virtually all of us.
thank
it's
you.
visible.
Thank you.
Being a social initiative, our speaker are giving their time effort for the session, and this is what we are having together with our gratitude.
Thank you. Thank
Thank
you,
you so much,
Rohit and
Rohit ji.
Kalpana ji, for the opportunity. Thank you.
Thank you.
Thank you once again, Kalpana ma'am, and I'm very it is very insightful session, I would say, the discussion of the practical issues of that hotel question. So I'm very thankful to Rohit ji for the reply, and thank you all our participants for being a wonderful audience. And we hope you found this session very valuable and thought provoking. Thank you so much. We will again meet next week.